Hey, what is up, everybody? Welcome to the Average Joe Dividends YouTube channel. I hope everyone had a great Thanksgiving weekend. I know I did. It was nice to have a couple days off. Hopefully, all of you had a couple days off as well. So welcome to this video. This is going to be portfolio update number 232. If you're new to the channel, welcome to the channel. What I do every Monday morning is I deposit $250 of my own money into this portfolio. This is my Average Joe Dividends portfolio. We can see what the current value is right now, just over 320K. This is live, so this is going to be changing as the video progresses here. The only thing I ask of you guys is please click the like button just for the transparency of the channel. I'm not trying to sell you guys anything. There's no buy me a coffee. There's no course I'm selling. There's no products I'm trying to sell you guys. I'm just showing you what I'm doing in real time to build real wealth. And what this is, this portfolio, it's about 15% of my current net worth. I will get into the other 85% of my net worth. And the reason I have this dividend portfolio is, and it's not all or nothing. A lot of people assume there's just dividend investors who do nothing but dividend investing or investing in stocks that pay a dividend. I invest mostly in ETFs like VTI or VOO from Vanguard or SCHD, and that is actually the main component of this portfolio. But I do have some individual positions as well. I don't just want dividends, I want growth as well. So let's get into this. We can see the 1 year performance of this, and this is going to lag the S&P 500. I know that, but my output with the dividends is much higher, so I need much less in this portfolio to generate income. The purpose of this portfolio, again, is for some growth, but for generating dividend income, which I can draw off of, and I don't have to worry about if the markets are up or down or anything. I can safely withdraw those dividends month after month, or or whenever I choose to take them. I can take them as they arrive as well. So we can see, for the last 12 months trailing, here are the dividends that have been earned, $12,853.05. Here's the money weighted return at 7.89%. We've had some ups and downs throughout the year, but we're pretty much at all-time highs. We had a little bit higher peak, I think, right about here. So October 28th is kind of the high water mark for the portfolio. But guess what? Over time, though, there's going to be a new high water mark. When that's going to be, we never know when that's going to be. So what I do is I dollar cost average into this portfolio. So let's go into the activity log, and we're going to see a couple activities that happened here. And namely, this is the last dividend that rolled in that has not been applied from BST. This is a monthly payer of that $537.28 that rolled in, and it came in as cash. And what I'm going to do is I'm going to distribute this into the portfolio where it is underweighted, and M1 will do that automatically. I also did the deposit this morning of the $250 that I mentioned before, and then it applied all that right here combined at $787.28. And we're going to go into each of these, and I'm going to click on them, and we're going to see the fractional or whole shares that were purchased. And then after that, we're going to see what the new dividends are going to be for each of these 12 companies here. So I've clicked on this, so we'll see the morning trading, and we had 12 buys. We're going to go through these one by one, and this is from the BST dividend being redistributed into the underweighted portion. So all these that don't that have a value of $20, these are going to be in underweighted positions in my portfolio. So first off, Allstate, that 102.03, that's going to be a part of the BST, and my deposit, the $250, but it'll be $150 of that going into this, and the other $100 will be in selections that I made that are $20 even. So the 102.03 went to Allstate, buying 0.47797 shares of Allstate, so nearly half a share of Allstate there. Next up, American Express, $50.95, buying 0.13987 of a share of American Express. We're going to see even these fractional share buys are going to make a difference in the next dividend. And ADP, this is the first of my selections, $20, buying 0.07805 of a share of ADP, so a small fractional share there. Pepsi, $20, buying 0.13383 of a share of Pepsi. Then BlackRock, $56.58, buying 0.05417 of a share of BlackRock. Then Kroger, it looks like most of it, nope, actually most of it is going to go into Oracle. Spoke too soon, but a lot of it went into Kroger, 145.07, buying 2.1535 shares of Kroger. And Kroger had some, last couple of dividend increases have been nice, like 8 to 10%. So hopefully we get another one of those in June. Next up, Illinois Toolworks, $20, another one of my selections, buying 0.08045 of a share of Illinois Toolworks. And next up, Merck, $20, buying 0.19039 of a share of Merck. Kimberly-Clark, still down with the acquisition, so I'm taking advantage of that. $20, buying 0.18251 of a share of Kimberly-Clark. Kimberly-Clark's one of those steady eddies that's paid a dividend for a long, long time. We'll probably get a modest increase, like 2-3% in January. Then NVIDIA, this is one of my growth plays within the portfolio. And this is something like a SCHD is not going to have in it, where I want some growth in here. But unfortunately, the dividend, there's not going to be a whole lot of growth from this with this 86.58 because NVIDIA pays such a tiny dividend. So it's buying 0.48648 of a share of NVIDIA, and every share of NVIDIA is another penny of dividend. So I'm buying like 0.48% of a share of NVIDIA there. And then next up is Oracle. So this is where most of the money went, the 169.24, buying 0.85192 of a share of Oracle. So 85% of a share of Oracle. Oracle tends to increase that dividend every other year, but I think it's like its growth rate is like 13%. So a nice grower there with Oracle. Then Travelers, 76.83. Been buying a lot of Travelers lately, so they must have been struggling lately as it's underweighted. Buying 0.26164 of a share of Travelers. So that covers all of the buys, a whole bunch there. 12. I like to see that BST dividend being redistributed within the portfolio into so many positions here to kind of bolster those, because BST every month, with the exception of when SCHD is paying, is the largest dividend. So in the first and second months of every quarter, BST is by far the largest. I want to get some of these other positions higher. So that's why I'm redistributing those dividends. So we're going to jump over to my Google Docs spreadsheet. I'll leave a link below to this spreadsheet so you can follow along at home, or you can use it yourself, put in your own companies. And you can see I have the company here, the ticker symbol, the share price using the Google Finance function, pulling that price live. Here's the average share price I've purchased each of these at. Here's the number of shares that I own of each of these. Here's the value. Here's the cost basis. Here's my gain or loss, including the dividends received. Here's that gain or loss in a percentage. Anything above 25% will be in green. Here's the quarterly dividend, with the blue ones being the monthly payers, and SCHD is the wild card because every single quarter they have a new dividend. Here's the current yield if I were to buy more Fifth Third. Here's the yield on my cost right here. We can actually look at Oracle, where I did buy some more fractional shares of Oracle here, and we bought into nearly a 1% yield here. You can see my yield on cost is higher. Here's the pay date. Everything is sorted A to Z by the pay date on the sheet. So we just finished the month of November. We had our November payers here, and then we're going to start then with our December payers. Maybe I'll look some of these up because we're going to have these dividends are going to roll in. I'm not sure if it's going to be the next dividend because I may have purchased fractional shares of these after the ex-dividend date, so it may be a little bit lower. But I think I looked up Kroger, and 709 is what I will be receiving. But we also bought some Kroger, a couple shares of Kroger, so this is going to change the next dividend for all of these. Oracle, American Express. We'll scroll down. There's some others in here like Nvidia. Will this go to 49 cents? I don't know if it's going to round up. We'll see if it will. With that, about half a share buy of Nvidia. Travelers are going to see that go up in the rest of these as well. We're going to see it go up in this column, the next dividend column. We're also going to see the cash flow of the portfolio go up for monthly, quarterly, and annual. So you can look at these as like a monthly paycheck, quarterly, or an annual salary right here from the portfolio. And then here are the total dividends. You can see like historically what I've received from Fifth Third. First dividend was $1.17 to the last $24.38. The next expected dividend, which will pay 3 months from 10/16, approximately is going to be $24.79 if I don't buy more shares of Fifth Third. So it's going to be about January 16th-ish should be when that one will pay. So these will be January payers. Once they announce their new pay date, I'll put that in here and I'll resort it, and it's going to bounce them back into the rest of these January payers in here. And then I also track the last increase for some of these. So let's look at some that are going to increase their dividend in December. I know there's a couple of them out here. There's Amgen. Last year they did 6%. SCHD from the year prior, adding up all the dividends, it was about a 5% increase over 2024. And then let's see if there's any more. So we have 2 Decembers. I thought there was a third. So yeah, we have Broadcom. Look at, hopefully they can do a 10-11% one and then push this next dividend over the $10 mark, which will put him in the green. So that's kind of the goal for these. Just want to get them all above $10. Of course, even higher than $10, like VST, we're way above that, is obviously in the green. But a couple of these are pretty close in the 950 range with Lowe's. Probably going to be the next one that'll pop over. Pinnacle West is also close as well. That doesn't mean I'm going to stop once they turn green. Just going to light all these up green. Then I'll have another goal of probably $20 for them. We can see the increased month. We already went over that. So what we're going to do is we're going to jump back to M1 Finance. We're going to go to the Holdings tab. We're going to update this sheet because we had those 12 buys, right? So it's going to change the average share price that I've paid for each of the 12. I'm going to use a VLOOKUP on the M1 data tab. That's where we're going to paste that data into. And it's going to change the average share price for those 12, the number of shares, and the cost basis. So rather than having to type in those 36 different data sets, I can just do a copy and paste in the sheet and it'll update it automatically with those VLOOKUPs. So I do as in from the Holdings tab, I grab everything starting from the name column, just do a copy here. Back here, M1 data tab, we can see we align the shares, the cost basis, and the average. The VLOOKUP is on the stock ticker symbol. That's how it finds it. We're going to do a paste special values only. Everything goes into the A column. It goes all the way down to like the 600th row. But you can see all the different company names in here. I think ADP is the smallest. But you can see the number of shares and cost, the value and the average share price and things like that for all of those. It just does a VLOOKUP against that. And we'll go back. We're going to see what the new dividend is. It's going to update it in the next dividend column. So we'll go over these one by one. So Oracle old dividend 1017 going all the way up to 1059. So that will be approximately January 24th, right around there. We'll get that new dividend 1059. Then American Express moving up from 802 to 814. So a modest move there. We're buying into a low yield there with 0.9%. Take a look at Kroger, moving from 709 to 785. Hopefully by the time June rolls around, if we get another 10%, and then with those dividend drips, maybe a couple more buys, fractional share buys, we can get Kroger over that $10 mark. Now look at BlackRock moving from 1181 now to 1210. And then not too much of a surprise here with Nvidia, with that almost half share buy, still going to stay at 48 cents. But the reason I bought Nvidia was not for really the dividends today. It's more the dividends tomorrow and the growth today. Because look at the growth. It's absolutely pummeled everything else. Really, Nvidia and Broadcom have been my two best performers for growth, but they don't really pay large dividends, especially Nvidia. So I have a good mix of stocks in here with growth, and also some that will pay a good dividend today, like a Verizon in there, and some others as well. So we're going to likely get that 48 cents. And then Travelers moving from 649 to 678. The ADP moving from 570 to 583. So slowly, we're trying to move some of these up to that $10 mark. Allstate moving from 802 to 849. Good jump there. Then in February, we'll get the 8% on top of that, getting Allstate close to that $10 mark. Kimberly Clark well over that. So they're at 2067 now to 2090. And then Pepsi moving from 28.29 to 28.48. And Merck moving from 1790 to 1816. Then Illinois Toolworks 1803 to 1816 there. Let's take a look at now the cash flow average of the whole portfolio. We saw the individual ones go up. So the cash flow average for monthly. So this is what I could count on for monthly income from this portfolio on average, because the first and second months of the quarter pay the lowest and the third month will pay the most. So we divide it by 3, because here's the quarterly, and we have to add in those two monthly payers twice, which are BST and O, because they're only accounted for once on this sheet. So I have to add them in twice to get the quarterly. You can see all the math here. 856 times 2, that's adding the monthly payers in twice right here, that total, to get the quarterly. And if you just take the quarterly, obviously divided by 3, you'll get the monthly, and quarterly times 4, you got 4 quarters, you get the annual. So moving up from 1122.85 to 1123.91. The quarterly is moving from 3368.54 to 3371.74. And then the annual is moving from 13,474.18 to 13,486.98. You can see just step by step. It's our small increments, but I'm buying every single week. I'm also dripping all these dividends I'm receiving. So what's going to happen tomorrow is I'm going to have dividends receiving from Kroger, Pinnacle West, Aflac, and Black Hills. We'll do is we'll go look those up, and we'll just make sure that we're going to actually receive those. And M1 will tell you when you're close to receiving that dividend. We'll go look up these individually real quick. Like I told you, I looked up Kroger. If we go to the 1 month view, we'll get the dividends earned. So 709, we can confirm that one for Kroger. So we're not going to receive the 785 because we obviously bought way past the ex-dividend date. But that's okay, because I'm buying when things are a little more on sale. So I don't want to time it too much and just buy only when it's going to be for the next dividend. So sometimes that's not a factor. So next up is Pinnacle West. We'll look up that there in this slice. And I'll leave a link below if you're curious to see what's all in this portfolio. So 965 dividends earned over for Pinnacle West. We'll look up Aflac. I think Aflac was one of those where I did buy a tiny bit after the ex-dividend date. So we'll see if that's true with Aflac. 1 month view, dividends earned, 14.26. So sure enough, going to be a little bit short there. So, and then Black Hills will be the last one, and then on Wednesday morning I'll receive a little one from KKR as well. But then it'll be a 6-day break, and then on the 9th you can see how it just keeps going, and the 16th will be a nice payday right there. I think SCHD will be paying the 16th. I'm not sure yet. I was just using some historicals, so that's just my guesstimation there. Could be wrong. Could be the week after that. So let's look up Black Hills. This should be a nice one from Black Hills. There's Black Hills, 1 month, 29.02. So I didn't buy any fractional shares of Black Hills. We'll do a count up of the dividends received so far. We'll put that over $60.02. We're going to come back to this. There we go, $60.02. I copied that over from, those are the dividends from last month, the 722.92. If you watched my video, I think I copied some lines down, and that's what caused that. So what we're going to do is we're going to put in the new dividend monthly, the 1123.91. We need to put that over on the monthly average dividend tracking tab. So 1123.91. Remember, the old one was 1,122.85. And here's the event. Remember, I deposited $250 and I had a BST dividend drip. So that raised my monthly income by $1.06. You can see right here, $1.06 there. And then I will have another event tomorrow. We'll put that in here real quick. So it will be Kroger. Let's look at the other ones. Don't remember all of them. I know it's Kroger, Pinnacle West, Aflac, Black Hills. These will be dividend drips. So no deposit at all. But we'll see this go up a little bit because of that amount, $60 in buys. That's not nothing. So it's going to increase it maybe by like a nickel or something. We'll see what it is. It just adds to the monthly income. And the three things that are going to do that are, of course, deposits, where we saw a $250 deposit, drips, and then the last dividend increase was from Merck. You can see 28 cents right there just from a dividend increase from Merck, which is quite nice. So most of these companies, they're increasing their dividends for me every single year. Some are not. Oracle is one that every other year, and Realty Income is one that does multiples per year. So we've covered that. Let's go to the Dividend Tracker tab. Hopefully it updated this. It looks like it did not carry over this. I should have, I need to lock this down, and let's do this. We're going to copy this. Looks like they're both doing that. We're going to hard code this on the old number. I noticed that it should be this, the 1,122.85. So we'll put that 122.85. Is that it? Let's see here. 1,122.85. I think that was, it should be $1.06. Is that right? Yep, there we go. Yeah, 1,122.85. So we got that accounted for. This should be hard coded. We'll put the $ format. I forgot to do that. It was still pulling for November. It was pulling in December's amount. That's why I didn't change there. But you can see from last month, I increased my dividends, monthly dividends, by $6.63. So you can see every single month, pretty much, except for with this was because of SCHD, I believe, lowering their dividend. But I kind of solved that problem by only used a trailing 12-month dividend, so it should be smoother. We'll just have increases unless there is an actual dividend cut by an individual position in here, but I haven't had that for a long time. Let's put that $250 deposit. You can see my deposits as well in here, so you can see like the history of the portfolio by month, by year, and then the dividends paid every single month. Here's where we're at so far in December. We're not even close to being done. We're going to break new records, I predict. I'm going to call it right now. It's going to be well over $1,900, I think, in dividends for December. So, but looks like we were down this morning, but it looks like we're now actually up a little bit from where we closed on Friday. So going up, going the right direction. So at $1.06. So nicely done. With that, we're going to go and close out this video with my total net worth statement. It really didn't change that much from Friday. It's probably up a little bit from then, but if you're new to the channel, I'll go over the other 85%. Like I said, this dividend portfolio, while it is nice, there's people who have larger portfolios than I do, and namely like Gen X Dividend Investor. You should go check out his channel. He has a gigantic dividend portfolio. He started before I did with this. I really didn't, really start to really kick this into gear until really 2022. You can see I kind of played around in it and really jumped into it, and I've been more aggressive with it, lately, from probably 2022 on. But I would check out some people like that. There's other channels that are smaller, and I think they're equally as important because you can see people starting out. But let's get over here, and I'll show you the rest of my net worth. So over at Vanguard, I have an IRA, a traditional one, small Roth one, and then the remnants of a taxable brokerage account that I sold to pay off my home. So we can see the value over at Vanguard right now is right around just almost 338K. It's 337.9. Here's my current employer 401k. I started work with this employer in March 2020, right before the whole pandemic thing, and I've been working home since the first week I started, which is nice. I have that privilege. Don't have to commute. My commute is down some stairs, which is quite nice. But this is the portfolio, or excuse me, is the value of that. It's all in S&P 500, and right now I'm just contributing up to the employer match that I get, which is it's 3% of my annual salary is what they match. So it's pretty nice, but I do 5%, so I'm essentially doing 8% is what I'm doing into this S&P 500 for my 401k. So here's my prior employments that I rolled into an IRA over at M1. So this is employer contributions rated about 800K. And then this IRA over here, this is cash I put in myself, that I contributed myself. These IRAs are not a part of prior employment. This is prior employment here. Then here's the taxable brokerage account we went into at length right here. Numbers are not going to be quite matching because this is M1 and then Google are pulling at different time frames, but they do align when the markets close. But that's what this line is right here. And over at M1, this is my cash to deploy into this portfolio right here. That's where that $250 deposit came from. So you're going to see this go down $250 every single week with a little bit of interest every single month. And then over at Synchrony, here's my emergency fund, and I've split it up. It used to all just be in the savings account, but since Synchrony lowered their interest rate to 3.65%, I opened up 2 CDs. One that matures December 24, 2026. Here's the value of that. And then another one at 4.1%, a little bit shorter term one, that matures July 28th, 2026. And there's the value there. So right about $96,700 right over there at Synchrony. This is money that really helps me sleep well at night. Then over at Capital One, this is where kind of money moves in and out. Like when I get paid from my employer, it goes into the checking account. But since there's such a low percentage in here of interest, I will move it right away into like my savings account, and then I'll move it here to anything above $10,000. So I can technically move the 6365. It's not enough. I'm going to probably wait till my next paycheck and then bounce it over here. And of course, money also moves out of this account anytime I pay off my credit cards, which here's the balances of those. Those have been all zeroed out. But that money, this $10,000, I'll just move it over to the checking temporarily, say it's $1,000 to clear a balance, and then it disappears from there. What I do is my bills, most of them I use my credit card. I use a cashback credit card for as many purchases as possible. I don't use a debit card. I use a cashback card, and I'm also very disciplined with my spending. Anytime I make a purchase, I log it into a spreadsheet. I track it every single month and make sure I'm not spending more than I'm taking in. Here's my total net worth, which is slowly climbing. Got above that $2 million mark, multi-millionaire, at least for now. The market could take a tumble tomorrow, and that status will be quickly revoked because we can see that most of my net worth, 78%, is in stocks. So I'm very dependent on what the stock market is doing. And that's one of the reasons why I have this dividend portfolio is the more expenses that my dividend portfolio can pay, it is more freedom that I have, because if you're using the 4% rule, or you can safely, in theory, withdraw that from your portfolio, and that is based upon the Trinity study, where I think it was a 60% stock, diversified stock portfolio, something probably like a VTI VU, and then 40% bond portfolio. So what I'm going to do is a dynamic 4%, probably withdraw monthly, and then based upon how my stocks are doing. So if the stock market tanks, well, what I can pull from the till is going to be a lot lower. So I think that will protect me by using a dynamic 4% rather than just snapping a line of 4%. Like, say I have $1 million and then I retire and I'm just going to withdraw 40% and then add in inflation adjusted every year. To me, that's not good enough, because I think if I do it dynamically, down the road, I'm actually going to have a lot, months where I could spend a whole lot more if I wanted to. I probably won't. I'm pretty frugal. So anyway, that's what these calculations are here. That this is based off of everything, of course, minus my house. You can't count that in the equation. It's only your portfolio you can count. So I've also done like a 4% rule on my IRA 401k, but I would like to do an average monthly dividend where when I'm 59 and a half, I'm only going to withdraw dividends and interest from savings. I think that may be the safest route ever, is just doing that. If I want to live a little, maybe some months I could pull dynamically, but I think the plan is going to be probably to be here, and by the time that happens, that's going to be about another 7 years. This is I guarantee it, this is going to be a lot higher as I keep on dripping dividends, or even all these dividend increases, and this is just going to keep snowballing. All this will, because I'm reinvesting these dividends, and you can see BST in here. I also got a dividend from this, is about $485 this morning. From this, which I just drip back into this portfolio. So I'm increasing all the number of shares here, and so all these dividends are going up just because of the dividends I receive from here as well, not even including the dividend portfolio. That's just a portion. This is just a portion of my strategy. So other things you can see from the sheet, I really started tracking my net worth carefully right about November 2022, and just tracking it. You can see it month by month. Also tracking my W-2 income. This is net. And then you can see expenses. We'll see where we closed. Let's take a look at November. I'll spoil my budget video, but this won't show the details. But here's my income for November. This is net of insurance and 401k taxes. And then here's what I spent for the entire month. So this was my gap, and this does not include dividends or interest in there at all. It's just the difference between my W-2 net and expenses. And so you want to try to have a gap here, a nice gap, and then invest that gap. And that's going to increase your net worth over time. You're going to have some months or a string of months where it goes down. And I think April, this was a bad time. You can see I was all the way up to 1.827 and then dropping to 1.6 in the 1.6s. And that could happen again here. Something catastrophic could happen in the market where up on the twos, and then I could be in the 1.5s, 1.4s, 1.3s. But you know what though? I kind of expect that could happen. I could have my net worth be cut in half, and I won't lose any sleep over that because I know that this, like my dividends and interests, that's not going to change as a result of that. Of course, long term, if we have some kind of depression over time, we could have some dividend cuts and things like that. But I think the cost of things are also going to go down as well. But that's all to show you guys for this video. I know it kind of rambled on. Hopefully you guys get value from that. If you do, please click the like button. Also subscribe so you do not miss future videos. My next video will be either tomorrow, Wednesday, or Thursday, and that's going to be my budget video where I'm going to go into depth on my income, expenses, and total net worth. And that's really important. I think it's actually more important than these buy videos. But let me know in the comments below what you guys are going to be buying this week. I hope everyone has a great week, and everyone take care.